Oklo stock is up nearly 700% this year. But here's what I keep asking myself. Can this actually continue? Because while Oklo's building the next generation of nuclear reactors, they haven't reported a single dollar of revenue ever. Now, I'm still cautiously bullish, but it's still a little complicated. You see, Oklo, they're not just designing reactors, they plan to own and operate them. They want to sell electricity directly through long-term contracts. It's bold, and if it works, it could be a game changer. Now, the company's latest filings do show net losses narrowing from 27 million to 24 million year over year, and a cash position of $129 million. And they even have a current ratio of 71, which is insane. It means that they can cover short-term debt 71 times over. But there is one thing that I haven't heard many people talk about. Until the Aurora Powerhouse actually delivers power, likely in 2027 or 2028, investors are betting purely on promise. That's why in this video, I'm going to break down what's real, what's hype, and the one signal I'm watching that could flip the entire story. Hey, what's up, everyone? My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. That's a good thing. Not here to sell you something you don't want. I break down the numbers so retail investors like you and me can make smarter, more confident decisions with our money. All right, so with all that out of the way, let's talk about Oklo. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Oklo is a nuclear energy company based in Santa Clara, California. They were founded in 2013 and they went public in May of 2024 under the ticker Oklo. Now, unlike traditional reactor developers, which only design and license plants, Oklo wants to build, own, and operate them, essentially selling electricity and heat directly to customers. Now, this model is built around long-term power purchase agreements, or PPAs, which allow the generation of recurring revenue while shifting the project risk and responsibility to Oklo. And that is a big deal because it means that Oklo doesn't just want to sell a product, they want to sell power, and that's a whole different game. Now, at the center of Oklo's offering is the Aurora Powerhouse. This is a compact, fast fission reactor. It's designed to deliver up to 15 megawatts of clean and reliable power. Aurora powerhouses can operate on recycled nuclear waste, and it unlocks energy that traditional systems just throw away. In plain English, they're turning yesterday's nuclear waste into tomorrow's clean energy. It's not just innovation here, that is disruption. Now, with demand growing rapidly and with agreements already in place with utilities, data centers, industry, and even government, Oklo is preparing for the first Aurora Powerhouse deployment by late 2027 or maybe early 2028. And if they can actually pull it off, I think we're talking about a turning point in the entire energy sector. So how does the market see them now? Well, to answer that, let's have a look at Oklo's recent stock performance. The last time I covered Oklo, the stock was trading at $134. Today, it's around $166. It reached an all-time high of $193, and even more impressively, Oklo stock is up 680% year to date and 953% in the last 52 weeks. That's an explosive run. And anytime a stock moves that fast, the real question is, what's driving it and can it last? Well, in a previous video, I covered Oklo's growth catalysts, and you can definitely check it out up here. But there's another side of the story. How is Oklo doing financially? Well, it's a question. It comes up a lot about many companies in my Discord channel, so let's have a look. While Oklo continues to advance its nuclear technology pipeline, the financial picture tells a completely different story. It's one of persistent and growing losses. The company has yet to report a single dollar of revenue this quarter. In fact, it's been the case since the beginning. So you could say that right now, Oklo's business model is all potential and zero production. It's not necessarily bad, but it's something that investors we need to price in because when Oklo released its second quarter financials, we saw that they reported net losses decreased slightly from 27.3 million to 24.7 million year over year. Now, that is a little bit of progress. A smaller loss means better cost control, but you can't confuse it with profitability. It's also worth noting that they've been in the red every quarter since June of 2024. And that highlights the fact that the company's path to profitability is still uncertain, at least until those Aurora powerhouses are deployed and actually producing and generating electricity. Translation, until those reactors goes live, the stock's valuation is running purely on belief, not cash flow. And belief, it can change fast though. Still, as a result of their recent round of equity financing, the company's net cash flow is positive at 129.6 million, which means they have enough cash to finance their upcoming initiatives. In other words, they're not broke, not even close. They do have the runway to keep building, and that's critical in a capital-intensive business like nuclear. Oklo also has a current ratio of 71.27, which means their current assets can cover liabilities by 71 times over. And that's almost unheard of, right? Most healthy companies are just happy with a ratio of 2 or even 3. 71 means the company's got some serious liquidity, and that buys them time and flexibility. It shows that the company is in an excellent position to meet their short-term obligations, and they can also use this new cash to fund new projects and improve their profitability. I've learned that in early stage companies, cash is a lifeline. And when you've got it, you can survive long enough to prove your idea. But when you don't, you don't. So that's it for Oklo's financials. But stick around with me because what the analysts say might change your mind about how you look at Oklo stock. A consensus among 18 analysts rate Oklo stock a moderate buy with a high target price of $175. And that suggests just 2% upside potential. And the drop in sentiment tells me that analysts, they're probably getting cautious, probably watching for proof before they can double down again. Now, in previous videos, I did cover how Oklo is making progress on its nuclear technology, but their financials, as you can see, they still reflect ongoing losses with no revenue recorded so far this quarter or in any of the past quarters. The company's latest filings also show that net losses are narrowing, which is a good thing. However, profitability does seem to remain out of reach, probably until these Aurora powerhouses begin generating electricity. So I see Oklo not as a momentum trade, but as a patience trade. If they deliver, the payoff could be huge. If not, I think the downside could be just as dramatic. But what about you? Is Oklo a good buy? Or does their current financial situation make you a little afraid? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe. It'll help others find the video, it'll support the channel, and of course you won't miss out on any of my future deep dives. Well, that's it for me today in this video. Thank you so much for watching, and I'll see you next time.